Welcome to the danger zone, ladies and gentlemen. We just had ourselves a squeeze higher near the weekly expected move with earnings right around the corner. And by danger zone, I'm talking about back month, first front month volatility. And I'm going to walk you through exactly what to look for when the situation of these market conditions can change. And I'll show you exactly the last time we had a reading up here in these levels. It happened to be just in the middle of February, but a couple of other elements took place to create quite a bit of volatility. And that's what we got to talk about on today's stock market brief show. So let's go ahead and get right into it. All right, ladies and gentlemen, welcome back to the show. Here's the S&P 500, the SPY on the 15-minute time frame. These were our daily expected moves going into today's trading session. This little blue line here is from my Asher bot. We had the upper level at 63,409, and this thing came basically right onto it within just a couple of cents going into some of those bigger earnings. And if you watch market net flow, this shows you the flow of the market, right? It shows the cumulative net premiums of calls and puts. The white line is the SPY. And when you crossed over here, the market went from range bound to kind of just choppy to rather bullish, and we floated higher. So this is an incredibly important tool to be on the right side of trade if you are an intraday type trader. And you have access to this if you are in the swing trading group. It's $9 a month. I give you the Trading Tick's entire auto posting suite of bots, but also the query channel where you can type in the net flow commands and you can get this specific chart just with like a different indicator down here, but you can see the cumulative net premiums, calls and puts. So very helpful stuff. And then also you get access to the Asher bot, the daily, the weekly, and I'm running an update on this too as well to give some additional data. And then also you get the premium and discounts on options. All you have to do is type in the command to get it. That's right now $9 a month. I do think that I'm actually going to have to increase the price in the very near future. So I'm probably going to lock in the members that are currently on it, and then any new member is going to be seeing an increase in price because of the costs to run this have actually are getting quite pricey, especially running that Asher bot. So if you want to take a look at it now before those prices go up, which I don't plan on increasing it all that much. And this is a very inexpensive project or process or platform or Discord or whatever you want to call it. But nonetheless, I think that I'm going to have to raise it on new coming folks. Now, if you do sign up for this, by the way, make sure to sync your Discord up, because that is where you get all of this data, right? So you buy through Patreon, then you sync your Discord up, and then you automatically get access into it. Okay, enough of that. I want to kind of walk you through where I'm at year to date. I'm in the United States Investing Championship. I've been doing it now for 3 years. Last year, I did 45% for the year. This year, I'm at 36.25%. This is my P&L curve for the United States Investing Championship. You can see the S&P 500 is up 8%, 7% for the Dow Jones, 19% there for the MSCI. And I'm showing you this because now I'm going to want to make sure that you understand where kind of the context and where my head is at and what you've been seeing with my P&L curve, how it's been pretty well mitigated other than seeing some volatility in early March. Really preparing for a potential big spike or turnaround is what that was. Okay, we do have earnings going on next week, and we just had Tesla report after the bell. It's rather mute, but we have a pretty large expected move of about $30, so we can very well go tag one of those tomorrow. Google also saw a little bit of a pop, then a little bit of a drop, a little bit of a pop back, still not even tagging one of its expected moves either. So there's a lot of room for movement coming into tomorrow's trading session. If you take a look at the SPY on the 15-minute time frame, once again, I did update you with the daily implied moves. You can see the upper weekly is right here at about 635, and overnight session or after the market closed today, we did go and tag that level. I like to see it in the cash market session, and then the Asher level is up here too as well. So if we start creeping up into these levels, just be aware that is where that daily implied move is, and also in confluence with the upper weekly level and zone there as well. As you can see, we're still above a rising 5-day moving average, and we got back above that week to date volume weighted average price. So overall, the bulls are in complete control right here. That is for certain. And we got the big earnings out of the way. I guess we have Intel, on Thursday, but those aren't really market movers. The market movers were today, and that was Tesla and that was Google. So we'll see what those look like coming into tomorrow. Now, I wanted to talk about back month, first front month volatility and how we're approaching the danger zone and to be aware. Now, for those that don't know, back month, first month volatility, right? 90-day, front month, 30-day. So if I look at this, we're looking at 1.20, which just tells us the back month is 20% higher than the front month. And you can see I just draw a line across. And when you get these kind of extended readings here, the market can go through a period of a pullback and or a kind of consolidation. So if I zoom into this and clean up the chart a little bit, I want to walk you through the last times that this has happened and also point out what the VIX did, because I think we have to look at the VIX futures or volatility futures to get an idea that, hey, this is around the area where we start to see volatility increase, and we do need to be significantly more careful when it comes to market conditions changing. Okay, so right here is right now. We can extend past this, by the way. That's totally fine to do. We've done that before over here, but I just want to walk you through this chart. So these red lines are when back month versus front month volatility was 20% higher. And this is dating back to August of the prior year. So you can go back through history. I just wanted to zoom in to make it look a little cleaner. The last time we were here was February 18th. And we came right into this level. We squeezed a little bit higher. And then we started to obviously go through the main period of volatility this specific year. Now, prior to that, you saw right over here, we got a nice big bump up, and then we reversed down, put in a lower high, and then a lower low before reversing itself. Over here, we crossed through it, and notice how we continued to go higher, right? The market went higher, but we still remained rather elevated from a back month versus front month volatility standpoint. And then over here, we actually broke down. I was actually doing the closing bell ceremony at the NASDAQ that specific day. That sucked because I wasn't able to trade the volatility, and I got stopped out of a bunch of those positions. I remember December 18th very, very clearly. Okay, over here back in September, you can see the market after a big run up, right? Front month first back month volatility got extended. And what did we do? We pulled back, consolidated before heading higher. So nothing too crazy. Over here in August, you can see this is after a big run up. What did we do? We consolidated, then we broke down before heading higher. So we're approaching the level, the danger zone, whatever you want to call it, the red zone, where we start to go through these periods of consolidation. Now, I just want to point this out, because everybody I know in the comments probably already said it. Now they might go edit their comments. I know who you are. You know who you are probably believing that the market cannot go down. And that's exactly when you do need to be a lot more careful, because if you look at each time here, it was after a massive rally, after a massive rally, after a massive rally, right? After a big pop up, after like a new all-time high. And then what is this coming after, right? Boom, a big rally, right? Or even a shorter time frame, a big rally. And this is what skews this. This is when things start to get rather frothy. Now, another element here, look at this brown kind of chart down here. That's actually the VIX. And if you look at the red line, what happened down here at the brown line, or sorry, the shaded area shortly thereafter of reaching into these extended areas, right? This one remained higher. Bam, it spiked up right over here. It spiked up right over here. We spiked up. So if you notice, when this happens, you look down at the bottom over here and you start to see volatility shortly thereafter start to pick back up. All right. So that is why I want to call this out, is because if you are a volatility trader, if you're, looking for a short-term pop in volatility, we are now nearing the time frame where that can happen. And if you look at volatility futures today, right? Volatility futures came in pretty hard today, down 5%. This is VIX futures. And now we're floating at about 17 or about 18%, so 17.96. So volatility futures came in. Even the VVIX, which is the volatility of volatility, came in quite a bit too, which are, some levels that we haven't really seen all too much this year. So it's kind of hanging around at those lows. Now, why is this all important? Let's put it all together into the context of market conditions. I want to take you back over to here. This was in February. I have this dashed line. This dashed line is the day that we slipped under the gamma flip line. When we flip under the gamma flip line, which I'll give you the update of what that is now. When we fall under the gamma flip line, it opens the door for dealers to begin selling into the selling and buying into the buying. This is what happens. This is where you could get increased volatility. And this is where liquidity dries up. Now, we have been above the gamma flip line for quite some time now. Remember, it moves with price. So it keeps on kind of pressing up. Right now, it's at like 62.40. So this is the gamma flip line right over here. And price is just above it near that upper weekly expected move. Now, prior to this dash line, what's this solid yellow line? That solid yellow line was Tuesday, February 18th. And that was when back month versus front month volatility right here started getting into that danger zone where it got 20% higher, right? Back month was 20% higher than front month volatility. So why am I calling this out? Because this is where things could get pretty sketchy, right? This is where we're kind of talking about, hey, watch out for the potential for the bull trap. And it happened, right? And we didn't call for this type of a sell-off, right? Obviously, because things happen and things occur, but it opens the door for massive selling because you're under that gamma flip line and back month gets pretty extended relative to front month. So as you can see, it got pretty extended, right? 20% higher. Then we crossed under the gamma flip line shortly thereafter, and it opened the door for dealers to begin selling into selling, for volatility to increase. And that's that combination that can really put some froth of just volatility back into these markets. And I don't think people are quite prepared for that. Now, right now in this current context, because the reason why I want to reiterate this once again is because we're above the gamma flip line, right? We're above it. This is the gamma flip line. This is where price is at. Okay. We're above rising 5-day moving average. So dealers are looking to buy the dip, sell the rip, buy the dip, sell the rip. The volatility comes in, liquidity increases, and we've been seeing that. Okay. So the point here is to be very, very cautious when we start crossing down. I think we're pretty clear on that on the last video, but I want to revisit that on this video. Now, you'll notice a couple of blue lines, these anchor volume weighted average prices. This one right here was from this consolidation breakout. You can see we came in to basically tag it here, and we had a beautiful press from that line. Now we have yet to tag this VWAP, this higher low volume weighted average price. I think I mean, I guess maybe perhaps this could be considered that. So maybe I can measure it from there, but we really haven't had a significant test from this specific VWAP. Now I want to call this to your attention. If for whatever reason, right, we press up higher or come test this where it's at kind of that lower monthly implied move, which I don't think that's going to happen this month, but just be aware that, coming into next month or the following month, watch what this VWAP is at and watch what price does around it if it comes to it. Because if you were to come even from around this area down to here, or say maybe, next month or something like that, it comes into it, that's only roughly about a 5 to 6% pullback from where we stand right now. And that type of move in the S&P 500 could probably freak a lot of people out if you're not prepared for that kind of a thing. So that would be the downside levels that I'd be watching on more downside, other than just like the lower weekly implied moves, the lower monthly moves, whenever that might be, and then this volume weighted average price. So that is what I'll be paying attention to if we start to get that under the flip line and volatility starts to pick its head back up. What I'm doing now, as far as this goes, is I've been really keeping a very close eye on various rotations. So you probably, if you're in the Discord, I posted a lot of trade ideas that weren't just like tech stocks, right? I posted about utilities. I talked about it on one of my episodes recently. I talked about healthcare. I talked about real estate, and we're starting to see a little bit of a pop in rotation. Now, I don't know if that's going to hold, but that's how I kind of positioned myself to be prepared, because I don't think that the market is just going to be over and done with. I think that what we're going to be seeing is rotations upon rotations upon rotations until, something, I guess, bigger happens or some bigger catalyst. That's all I got for you on today's episode, everybody. Hope it helps out, give you some insight into what it is that I'm looking for and how we're approaching now the more cautious levels. And I just want to reiterate that on today's video. See you later.